So hi guys, a very good evening to all of you. Rahul Prajapati this side, and welcome to this webinar. So the agenda is that I hope you all are doing great first, okay? And the agenda is to, for this webinar is to, talk about the basics of the options mostly. तो जो सेशन आज का रहेगा, we'll talk about थोड़ा बहुत options के बारे में कि options क्यों करना चाहिए and why it is important for, we as a option trader and क्या चीज हमें ऑप्शन में देखनी चाहिए स्पेसिफिकली एंड तो बेसिक से स्टार्ट करेंगे ऑप्शन होता क्या है एंड देन विल टॉक अबाउट कि ऑप्शन बाइंग क्यों करनी चाहिए ऑप्शन सेलिंग क्यों करनी चाहिए एंड देन इन लेटर पार्ट विल टॉक अबाउट टू डिफरेंट स्ट्रैटेजीज बहुत सिंपल स्ट्रैटेजीज के बारे में बात करेंगे ऑप्शन सेलिंग की तरफ से और एक ऑप्शन बाइंग की तरफ से ओके एंड यू कैन अप्लाई इट फ्रॉम एनीवेयर इसमें आपको स्पेसिफिकली किसी एप्लीकेशन का जरूरत नहीं पड़ेगा यू जस्ट नीड टू हैव वन चार्ट एंड यू कैन सिंपली गो एंड डिप्लॉय इट ओके तो तो जैसा हमने बात किया स्पेसिफिकली यहाँ पर इफ यू सी तो विल टॉक अबाउट द ऑप्शंस बेसिक्स ओके फाइन and we'll talk about option buying and selling, then we'll talk about why we need to trade the options, okay, and then we'll talk about option sellings or option selling जो आजकल बहुत prominent है market में. There are a lot of people who trade the options by selling specifically, so they are option writers, okay. और एक इंट्राडे ट्रेड यूज करने की कोशिश करेंगे. विल टॉक अबाउट कि इंट्राडे में पहले आवर में मार्केट में ट्रेड कैसे करें या फिर आप आखिरी आवर की बात कर लीजिए जहां पर भी मोमेंटम आता है and then we'll try to conclude all the things, right? Okay, so this is all the things we are going to talk about in next 1.5 hour, okay. So we'll go very slow and mostly the webinar will be starting थोड़ा पहले 10-15 मिनट 20 minutes we'll talk about very basic things ताकि because there are a lot of people who are very new to the options तो उनको भी थोड़ा जानने को मिले कि ऑप्शंस क्यों ट्रेड करना चाहिए क्या होता है ऑप्शन बाइंग एंड सेलिंग एंड देन विल टॉक अबाउट कि कुछ सिंपल स्ट्रैटेजीज को यूज करके मार्केट में पैसा कैसे कमाया जा सकता है एंड दिस इज हाउ आई टीच, राइट? ओके, तो जब भी कुछ स्ट्रैटेजीज या कुछ कहीं पर भी मैं सेशंस लेता हूँ तो आई जनरली टॉक अबाउट दिस काइंड ऑफ स्ट्रैटेजी सिंपल और बहुत बेसिक जो कोई भी डिप्लॉय कर सकता है. ओके, सो विल टॉक अबाउट ऑन दिस थिंग्स, राइट? ओके, चलिए स्टार्ट करते हैं सेशन. ओके, सो फर्स्ट ऑफ ऑल हमेशा बहुत अच्छा कोट मैंने कहीं पढ़ा था ये चीज कि सक्सेसफुल जो होता है वो एक जो गोल होता है किसी भी सक्सेसफुल ट्रेडर का तो आपको ट्रेड अच्छे निकालने आने चाहिए. ओके, मनी तो बन जाएगा, पैसा तो बन ही जाएगा, राइट? ओके, तो मेरे जो मेंटर थे उन्होंने भी मेरे को ये बताया था कि पहले अपना नुकसान काटना सीख जा तो नफा तो आ ही जाएगा, राइट? ओके, सो जो नुकसान हम कंट्रोल नहीं कर पाते वही ऑप्शन के थ्रू करा जाता है. ओके, हम फ्यूचर्स ट्रेड करते हैं, इक्विटी शेयर बाय करते हैं एंड वी सिट ऑन अनलिमिटेड रिस्क. मार्केट ऊपर जाएगा तो प्रॉफिट, नीचे गिरेगा तो नुकसान, राइट? ओके, तो वही चीज हमको कैप्चर करनी होती है क्योंकि हम ज्यादातर फोकस करते हैं मार्केट फोरकास्टिंग के ऊपर. अगर पूरा टाइम मार्केट की फोरकास्टिंग करते रहेंगे तो गलत होने के चांसेस हमेशा है. ओके, सो फोरकास्टिंग शुड बी वेरी लेस एंड मोस्टली हमें हमारा फोकस हमारी स्ट्रैटेजीज या किस तरीके से ट्रेड सही की जाए उस पर किया जाए. ओके, सो दिस इज हाउ विल ट्राई टू talk about this. Okay, so the whole agenda will remain on both the things, right? Ki how to make money and how can we understand few strategies very easily, right? Okay, okay, so initial first of all the option basics. Okay, so what are the options? We'll talk about this. Okay, so first of all let's see, we'll talk about very simple definition and we'll try to build a concept on this. So before we talk about the options, right, what we generally do is we trade futures, right? Okay, now future is very simple contract. Okay, let's say you buy SBI future at 400 rupees. Okay, and if this went up by 10 rupees up, you'll make 10 rupees. If that goes down by 10 rupees, you'll lose 10 rupees. Okay, that's as simple as that. Okay, so that is kind of again a financial contracts which people trade. Okay, and that is a linear graph. Okay, so it's linear. If it goes up, you'll make same amount of money. If that goes down, you lose that amount. Okay, so you will always have an equal opportunity to earn and equal opportunity to lose, 50-50% probability. Okay, so eventually when you're trading something on that intuition, right? Okay, so somehow you are going to majorly end up in losing part because we are not so good in trading as of now कि हम हर बार we attain 100% of accuracy in that case, right? तो गलत होने की probability will always keep on increasing. So So the agenda is that key we'll talk about options and how options can improve us in trading the market. Okay, so it's very basic session. We'll go and slowly and gently we'll build up on this concept, right? Okay. So first of all, option what? Okay, what is option, right? Okay, so it's kind of a thing. Let's say we'll go with simple definition. It's a chance, okay, or it's a, you can say it's a chance to buy or sell. Okay, buy or sell what? Okay, buy or sell, let's say for example anything, right? You can buy or sell anything by betting on the price. You want to buy something or you want to sell something, but you have a view on the price that either price will go up or either price will fall. Okay, when you anticipate that some some assets price is likely to move up, so you will go and buy that thing. When you feel that this something is going to fall in price, okay, so that means that is going to, you're going to sell it, right? Okay, so it's kind of a thing, or you can say a contract where you enter into a contract and you decide that okay, if the price of that particular commodity or share likely to rise in a rise in future, right? Okay, so what we'll do, we'll go and we'll enter into a contract so that we can buy that contract in a future date. Okay, and same thing we'll go with in the opposite side, that is when the price is likely to fall. Okay, so options generally gives you a right, it's not an obligation. So in general, if we talk about futures, if market goes up, you'll make money. If market goes down, you're losing, because there is an obligation that you need to fulfill if the market goes down, right? But that's why it is not equal to obligation here. That means in options you don't have an obligation, here you have a right. Okay, you have a right that you will buy something in future if the price goes up. Okay, if the price goes down, you are not entering into the contract and just you are ready to exit from that contract. Okay, so there are two type of option. I'll give you one example also, okay, so that will help you easily. So there are two options when we call something called call. Okay, so call option, that means in which we anticipate that price will move up, or that means you have a right to buy. I'll explain what is right to buy and right to sell. Okay, and something called put. Okay, so that when we're anticipating that price will fall, so we have a right to sell in this case. Okay, so this is a simple definition that we talk about. Okay, now let me explain you how this works. Okay, so if I give you a small example about okay, so let me just write it. Okay, so there is a, let's say, farmer, okay, and there is a baker. Okay, fine, and the farmer produces wheat. Okay, that is example. Okay, simple. Okay, now the current price of the wheat is, let's say, 50 rupees per kg. Okay, now the baker anticipate that in next 5 months, let's say, the price is likely to move up. Okay, and he feels that prices might move to 100 rupees. So what bakers do, he goes to the farmer and say, let's fix the price of the wheat today at 50 rupees per kg. And if that happens, right, if that, let's say, the price, so I'm anticipating that price might move up, so I want to fix this price at 50 rupees. Okay, if price move to 50 rupees, 100 rupees, let's say, or any price above 50 rupees, I'll come and buy it from you at 50 rupees. That means give me a right so that I can buy wheat from you at 50 rupees any case. ठीक है, 50 रुपए में मैं आपसे खरीद सकूं, that is what a right I want in the first case. If the price is higher than the 50 rupees, if the price falls, what will happen? We'll simply, don't do this contract. Okay, if the price goes down, let's say price goes to 20 rupees, I will not do the contract from you. I'll go and buy it from the market, right? Because the market price is 20. So why should I buy it from you? That's a simple definition that we can have. Okay, so why the farmer will enter into this contract? Because farmer is seller in this case. Okay, so what happens if farmer is getting ready? So he will say, why farmer will get ready for this contract? Logically he should not, because in both the situation he will lose. If the price moves up, he will make money. If the price moves down, he will buy it from the market. Why he will come to the farmer in that case? So the logic here is that why farmer will agree to this contract? Because farmer is producing that wheat. Okay, and he might have a higher knowledge than baker about the wheat. So he knows that the price is not going anywhere. So he will enter into this contract and say, okay, I'll sell you at 50 rupees, but I know that price is not going anywhere. But both can be wrong, both can be right. Okay, that's the thing, right? So, but the farmer will say there is a situation in this that in both the situation it is going in your favor. So give me some rupees, let's say 10 rupees per kg as a, just a token money, which is not non-refundable. Okay, so that is the contract. So Baker said, give me a right so that I can buy wheat from you at 50 rupees. And if market moves up, I'll simply make money out of it, right? Okay. And if the price goes down, I'll buy it from the market. Okay, so that is what the right. And farmer agrees to this because he knows that the price is not going anywhere. So he has taken a 10 rupees out of it. Okay. Now this is the, the contract. Okay. Now let's say the first case is the price moves up to 100 rupees. So Baker will buy at 50 rupees from farmer. He will go and sell it at 100 rupees. So he will make how much? 50 rupees. Okay. That is the profit. But he has paid 10 rupees as an extra cost, which is not refundable. So that will be reduced. Okay. So anyhow, he will make 40 rupees in this case. Okay. That is the first case. If the price goes down to, let's say, 20 rupees, so farmer will say, I don't want to do it contract. So he will ready to lose 10 rupees that he has paid. So that is the maximum loss he can have. Okay. And third case is that, so we'll talk about this again. Okay. So, and if the price remain 50 rupees, so I can buy it from the market. I can buy it from the farmer also as a baker, right? Okay. So 10 rupees has to lose in this case. So what happens is that if the price goes down and if price stays below this, the maximum loss as a buyer can have is 10 rupees. But in that case, when we talked about the, the futures, if the market moves up 10 rupees, you will make money. If market moves down 10 rupees, you have to lose 10 rupees. But here are logs, the loss is logged in 10 rupees. Anyhow, that is the maximum loss. Okay, fine. So that is the case. Now, if we talk about this, so there are buyers of the options and there are sellers of the option also. Okay, so if someone is buying it, someone is selling also. Okay, now call option is when we have a right to buy. Put option, we have a right to sell. Totally opposite. Okay, now what is the view about the market when we talk about this? Simply just understand this thing. When we buy option, we have a bullish view in the market. Okay, fine. Whenever we have a we buy option, it is a bullish view in the market we have. Okay, we see that market is likely to move up in coming up future, right? Okay, when we buy put option, we have a negative view in the market. That means market is likely to fall. Okay, that is a simple thing. Now, when we talk about the selling of the option, that means we are considering from the perspective of option seller, that is who is a farmer in that case, the previous example we have seen. So we have seen that buyer or baker will make money only when market moves above 50 rupees. That is the case, right? But at 50 or below 50, only the farmer is making money. That is limited. So he has a bearish view on the market, or he knows that the price is likely to remain below 50 rupees. So it will not give. So it is a neutral view and it is a bearish view. Either market should fall or either market should remain above that level, remain below that level. Okay, so that means, it's a bearish view. So let's say if the market remain 50, the farmer will make money. If it come to 40, again, he will make money. If come to 30, he will make money. If come to 10 rupees, he will make money. Any price below this. But if the market moves above 50, that means in that case, what happens is he will start losing, and this buyer will start making money, right? So that's why the views goes in this way. Okay. Now in put case, what happens? We have a bearish view. Okay. So if market falls, we'll make money. We have a intention that, okay, market is likely to fall. Okay. So put option case where we have a right to sell. So in this case, who is a buyer? The farmer will become the buyer and the baker will become a seller of the option. So because farmer is producing the wheat and he want a right so that he can sell it at a, different price if market falls in coming up future, right? Okay. So in that case, so that is, so on option seller, put option seller has a neutral view or bullish view. Okay. So that's why I've created this thing. If you see, if these are the views, okay. So either he wants that market to go up or buyer, and in seller of the option, it says that, okay, market should move up. It can move up, but, or it should go down, but it should not cross that line. That line is the strike price or the price we have sold. And in this case, market is bearish and it should not fall below defined level that we have. Okay. So this is the view. So simple, just remain whenever we buy option, call option, it is bullish view, and put option where is a bearish view, right? And selling turns out to be opposite and neutral, right? Simple. Okay. Now options payoff is that whenever market moves up, okay, so we have an undefined profit capacity. So if market keeps on moving up 100, 200, 300, 400, 500, on the higher side, it is linear graph. Okay, so for a buyer, so he will make money exactly as the future, buyer is making. But on the lower side, we have a loss limited. And we know this thing, this is very simple thing that we know. Okay, so these are the two counterparties to each other. So if if one has an unlimited profit, one is likely to have unlimited loss. If someone is going to have limited loss, the other party is going to have a limited profit. That's how the situation works. And this is both for same call and put, right? So if someone has a capacity that he can earn undefined profit, so other party might have a situation in which he can lose undefined loss. So he can have undefined loss in that case. And one is earning limited profit, so the other party can lose only limited. That is the thing, right? Okay. So option buyers have a good opportunity to make money, but the probability is very less, because we have seen that if market, so this is a strike price 50 rupees we have sold. If market moves up, only he will make money in that case. If it remains 50, we will lose. If market falls down, he will lose. So any out of these three, two options are in our option seller's favor. One is only in the buyer's case. So he has a probability of winning almost like 33% only. Okay. And he has a probability of earning 66% approximately. Right. So that's why, you might see in that, there are a lot of people as option seller are, trading the market these days. Okay. They wanted to become option seller or option writer. Okay. Now see. Now, what is the buying of a call option? So see. So just an example, small example, previous old example. So what happens here is that in just like probably last year, okay, so Mindtree was trading at 2800, and after that, in just like 15-20 days, the stock moved up to 3500. It's a good move, right? Almost like 700 points move. Okay, so how does this thing works out? Fine. So what happens in this case? Now see, observe it. So this was the price. Okay, so if I just put it here, you can see this is the price. Okay, now we need to see, because we are checking it from the 11th August. So check it from here only. Okay, now the call price was 78 rupees. Okay, the future price was trading at 2890. So we are talking about 2800 call option. Okay, this is a strike price which we enter into a contract, right? Okay, now what happens? See, the price keep on moving up and up and up. Okay, so it moved to 3500 almost, and see the 777 rupees call option, the 78 rupees call option becomes 700 rupees in that case. So anyhow, in futures also we have made almost 700 rupees, in options also in the end we have made almost 700 rupees, but we will reduce this. So there is small reduction of the premium that will happen, but eventually we are approximately making the same money, right? Because the premium will also is not a static value, so it keeps on changing, and it will eventually makes help you to make the same amount of money. So that call option from 78, it rises by how much? So what happens, it is not a good percentage, right? In futures, let's say you bought this future. Okay, so we have earned 600 rupees on 2800, right? But here we have earned almost like 700 rupees on 100 rupees, right? Okay, so that's good percentage return. So that's why the options become so lucrative in that case. The percentage that we can earn is very huge in this case, right? Okay. 600 divided by 200, you can calculate the return. Okay, this is what we have written. Okay, but here almost 700 divided by 80 rupees, so this is what the return we have, right? Okay, now see, there is so call option has a positive relationship with the future. That means if the market moves up, the call option will exactly move in tandem. See how the option price has moved from the future price has moved up here in this case. Okay, and see the call option prices also look similar. After that, it moved up to 700. Right, the both graphs are same. Okay, so that means underlying and call has a positive relationship. Underlying and put has a negative relationship. Right. That means if I would have plotted the put option chart here, so it would have been look like this, something like this. Okay, so totally different, opposite, right? Okay, so this is how it works, the basic understanding of the both the things, right? Okay, okay, now let's try to solve this so that we have some practice about it. Okay, we'll talk about this and further. So let's say we have a 2800 call option. Okay, this is the price, and we have, we bought the spot price is 2800 and we bought 2800 call option. That is the price. Okay, premium. Now, what will be the profit and loss if market closing at 3800, 2877.5, 2800, 281 or 2600? Okay, so we'll calculate the prices on this day. Okay, so what is that? So let me talk about the first case. Okay, so first case is 3500. Okay, so in 3500 is case, what happens is that we have a right to buy Mindtree at 2800. So we will buy it. Okay, and the market price is 3500 right now. Right? So we'll make approximately 700 rupees here. Right? Okay. So it's almost 700 rupees we have made. Okay. Minus we need to reduce the premium. That is 77.55. Okay. So this is the amount we will make in this case. First case. Okay. The next case is 2877.50. Okay. So yes, we will enter into the contract. We will buy at 2800. And we will exit at 28.7. So 77.88. Okay. So just 77.55 is the price. Okay. 50. Okay. That's okay. Just take it 55. Okay. So this will become 0. Okay. Because we'll make here in this case 77.50 minus, this is the premium that we need to reduce, 77.50. So that will make 0 amount for me. So that is a break-even point. We call it a break-even point where we are not earning anything. We are not losing anything. Okay. That is the second case, right? Okay. Third case is exactly 2800. So either you buy it from me or you don't buy it from me. You will lose how much? 77.50 as a buyer. Okay. Third case, the market moves to 2800, 2801. Okay. That means in that case, we will buy it. We will buy at 2800, right? And we will sell it at 2801. So we'll make 1 rupee out of this and we will reduce 77.50. So we are still in loss, but we'll do this contract. Okay. 76.50. Okay. This is the amount we'll give. Okay. And when market falls to 2600, okay, we'll not do the contract. We will try to buy it from the market. So we're ready to lose 77.50. Okay. So this is the payoff we'll create for all these strike prices. So see, when market is actually moving above 2800, then only we are making money. That is the first case. Okay. Rest mostly we are not making air money here. We are not making any money here. We are losing again 76 rupees. We are again losing 77 rupees here. So in the most of the cases, option buyer is losing in that case, and option seller has a upper hand in this case when market is not moving anywhere or it moving against you. So out of 3, 2 is in the option seller's favor, right? Okay. So there is a break even how you can calculate it. So for call option, it's strike price plus premium. So 2800 plus premium, that is the rate. So that is a break even. So that was the case, right? And in put case, strike price plus minus premium is the break even that we are going to have. Okay. So that's a different in that case. Fine. Fine. So there is a theoretical formula to calculate this kind of profit and loss. Okay. So you can put this. So I can show you the first one. So max of spot minus strike. So what happened in the spot price, that moves to 3500. So spot minus this price, that how much it will give you? So how much it will be? It will be 700 rupees. Okay. And 0. So max of these two, this value, either 3500 minus 28 or 0, whichever is big will take. So in this case, what happens? 700 is the big amount. So we'll take that. Okay. Maximum of these two value. Right. If that value turns out to be negative, okay, then we'll take 0. So here 700 minus 77 will make 622.50 as a profit. So eventually, whatever we are doing in the earlier case, we are doing it from the formula perspective. Okay, that is the same thing. Okay, now this is the payoff graph. Okay, so at different rates, if market moves to 2800, how much we are earning? If market moves to 3000, how much we are making? 3200, how much we are making? Like this. Okay, so profit and loss on different levels. Okay, so now if you see what happens here is that on the higher side we are making incremental profit, and on the lower side market is locked at a defined loss of 77.5. So as a buyer, we cannot lose more than the premium that we have defined. Okay. Now see, the graph will look like something like this. The 77.80 is the loss that we are going to have. And on the higher side, if market moves up, we're going to make money in this case. Right. And it is looks like a linear on the higher side. And but in the lower side, it is non-linear. It is defined loss. Okay. Fine. This is what we have. We are talking from the perspective of option buying. Okay. Okay. So let's move to the selling part. Okay. So why people write options? Okay. Who are the sellers and why they sell options? Generally, that is the case we need to learn. Okay. Now, if you see what happens, this is NSE chart. Okay. So Nifty screenshot. So what happens on this day, 25th July, this is an old screenshot. Okay. Markets open at this rate and started falling. Okay. It came from 16,700 to 16,600, 100 points fall in Nifty, right? Okay. Now see, in the same case, what happens is that we have, let's say we have sold option of 16,700, right? Okay. So market falls and see option is also started falling approximately. So that 120 option becomes 66 rupees in just like 3 hours. Okay, almost half. Fine. So they both have a same relationship. See, if the underlying is falling, the option is also falling. So jab is time pe when the price was trading here, we sold 16,700 call option. When market started falling, the option also started falling. Okay. Fine. This is how it works. Now see, the graph will, this graph will change in this case like this, because we have a defined profit of 120 rupees. If market keeps on going down, we'll make money. And if market started moving up, so they have a different, opposite graph. Okay. So how was the graph of that person? So it was looked like this. And it was going up. Right. So this was green. This was green, right? Okay. Fine. So this was looking like that. So in that case, if the buyer is making money from here, the seller will start losing money from here. If the seller is started losing money here, the buyer is if a buyer losing money here, the seller will make money in this case. So that is the graph is totally opposite. Fine. So this is how the option selling works out in this case. Okay. Now there is opportunity in this case, as we talked about this. Okay. If you talk about the, probably you know or don't know about the moneyness of the options. Okay. Probably we have a very less time to will not talk about this moneyness of the option, but probably you might have heard about in the money option, at the money option, and OTM options, right? OTM options. So OTM options generally, they both expires. So wherever it expires, right? Okay. So if the market is, let's say 17,000, all the options above 17,000 call options will expire 0. They will become 0. Okay. And all the options below 17,000, if market stays at 17,000, all the options, put options below 17,000 will expire 0. Okay. So they say it's almost 50% of the, options expires worthless. But we have seen that, there are even higher percentage of this option, which say that that expires worthless. Okay. The reason being is that the total volume that happens in the options are most of the trading happening in the OTM option. Logically, 50% options are only expiring worthless, but if you talk from the numbers perspective, OTM options expires more. Okay. They have a huge volume, or OI, open interest, right? Okay. So that's why from that perspective, we lose. So option buyers lose in that case. So the people keep on going and buy out of the money option, then they keep on losing it, right? Okay. So that is the problem that option buyer has. And we as a option trader need to learn that we cannot just do this silly mistakes every time. Okay. So whenever even I started the option journey, I started as an option buyer only. And although I'm still option buyer, I prefer option buying only. Okay. But still we try to, if you go from the selling perspective, you have that probability of hitting that loss. Okay. So even if you're like collecting 20, 30 rupees as a premium, let's say, so you are trading for a probability, and that probability eventually come up in your life, and that will take off all of your profit that you have earned, right? Okay. So that's why option selling becomes bit risky. Okay. But still they have opportunity. So people, because all 66% of the probability that is are in our favor, so option sellers make money in that case, right? Okay. but that problem always come into the picture, right? Okay, so that is what we have. Okay, now if we talk about the Y options, so just simple example, I'll show you one. Okay, so we'll try to compare it with the future, right? Okay, so let me just show you from the application perspective. Okay, so just give me a second, right? Okay. Okay, so when we talk about this thing, so let's compare the profitability and compare the futures and options, right? Specifically. So I'll go to the custom. Let's see if I talk about SBI. Okay. So SBI is trading at 500. Let me talk about the futures only. So the current price is 542. I'll buy it. Now you see what is happening in this case. When we buy a future will ask for a margin. Okay. That margin is equal into lot size multiply by, so multiply by CMP. Okay, whatever the current price, which give you contract value. Okay, it is the contract value, right? Okay, and the margin is always some percentage over contract value. So let's say 20% of contract value. Okay, that is margin. Okay, so whatever the current price, 542 multiplied by 1500. Okay, that's the quantity. Okay, this multiply by this value. Okay, so that is the contract value we have. So it should be approximately 8 lakh rupees, and whatever the amount you get, just multiplied by 20. 20% is approximate value. I'm not telling you exact value. Sometimes it can increase also, it can decrease also. Just for the reference to understand how the margin is calculated, this is what the margin we need to pay. So this will eventually comes up around 1.5 lakh rupees or 2 lakh rupees. Okay, so that for buying a future, we need to pay that much amount, and even we are selling the futures, we are going to pay that much amount. Okay, now what happened is that, see where we are here at right now. Okay, so let me just show you. 5, let's say 600 and 500. Okay, now let me save it. Now if you go and check, what happens is that, okay, so let's see this thing. Okay, so right now we are trading near 540. Okay, so this is somewhere here. Okay, fine. Now see, if market moves up to 10 rupees, let's say up 7 or 8 rupees 9, so we are making 11,885. Okay, that is the amount. And if market moves down by approximately the same amount, we are going to lose that much amount only, right? Approximately. Okay, so that is not the exact value. So we'll just, let me just reduce this value if I can get that. Let me just do it. 560. Okay, 520. Okay, now if I see 544. Okay, stop. Okay, so approximately the value will come. Okay, so 545, and if the market moves up, approximately the same loss we have. Okay, so this becomes linear graph. Okay, so if you see here, this is a linear graph. So 10 rupees up, your same profit, 10 rupees down, same loss. Okay, so this is what the future at. So what is the problem in this case is that you buy a future and you are losing the same amount and you can earning the same amount. The potential is still higher in the futures. Okay, but one problem is that we are paying a huge amount. That is the first thing, and we are sitting at an undefined loss. Okay, so if market falls like this, if let's say we bought it and next day the stock opens with like 10% to 20% gap down, so we are going to have a huge loss in this case, right? So we wanted to protect ourselves in that case. So what I'll do, I'll simply go and add or buy a future in this, or buy options in this case. Okay, so simply if my view is bullish, so I can buy 520 540 call option. Okay, so in this case, I just need to pay how much? So that is first thing, let me calculate the value. So 20 rupees, okay, 20.5 multiply by 1500. That is the amount that we need to pay to buy this option. Okay, if we multiply this value, okay, this is the amount that we need to pay to buy this option. And if market moves up to, let's say, 500, 600 rupees, we are eventually earning the better profit than this. And my loss is logged in this case. So in any case, even if market moves to 500, 490, 450, my loss is logged in this case. So maximum 30,000. That will not increase eventually. So whatever the amount is we are paying, that is 30,750. That is the amount we are paying. And that is the maximum loss amount I can have in this case. But if market moves up in my favor, I'll make the incremental profit. Okay. As soon as it will keep on moving up, we'll make incremental profit. Okay. It's straight. But on the lower side, it is defined. Okay. So we are not losing anything more than 30,700. So what is the thing is that how options are good in this case, that eventually you're making good profit, even better profit, by investing less amount. Okay. Second thing is that you are not sitting at undefined loss anyhow. Okay. So you're not going to stuck up in some different things. Okay. And jab tak undefined loss nahi, you are not going to lose the whole capital. But there are still people who are losing lot of issues and losing a lot of money in the options. Okay. And probably that too from the perspective of buying only. And there are few people who are losing from the selling perspective also, but that is the case, right? Okay. So we don't have to lose money in this case. So options are the hedging tools, and they are here to protect your money, not to you lose money in this case. Okay. So try to understand the difference, why we need to trade the options specifically, and why we want to not to trade the futures. Okay. I am one of the victim that of the futures trading, that having a huge loss in even in one day, right? Okay. So after that big hit that I had in the futures market, then I shifted to options and I learned this thing. Okay. So eventually everything will come into the picture using the options, right? Okay. And one more thing, even if you're any particular system you are working on, even that has a pathetic strike rate, okay, let's say only 40%. If you deploy it with the options, eventually your profitability might increase to 60-65% very easily. Okay. So it's not about forecasting. Again, I told you, it's about the how strategy and what kind of option that you take. Okay. And that will eventually protect you. Right. So in options, we are protected downside. We are not losing any huge amount. On the higher side, we'll make money exactly the same. Okay. And this is how, and even you are paying very less amount in this case. Okay. Even like probably only 25%, less than 25% of the amount that we are paying to buy a future. Right. So anyhow, you are not sitting an undefined loss. So any black swan event, you are protected in this case. Okay. Fine. That is the Y options case. Okay. Now, okay. So now let's come to the trading part. So we understood the buying and selling and why we need to trade the futures. Okay. Why we need to trade the options only specifically. Okay. Now, two trading setups. So one is, we'll talk from the selling perspective, because there are a lot of sellers who want this. So we'll talk about the selling perspective. So selling could be lucrative. Selling on breakout specifically can become very lucrative, because we know that the market is giving a breakout, so it will run up. So selling options become very good in that case. Okay, fine. Breakout kaise ढूंढना है? How will we try to get a breakout? It is basically, you can get it from any technical charts. Okay, that it is giving a breakout, any chart patterns, or probably any resistance breakout, support breakout, or probably you can simply go and check the highest call and highest put data of the options. Okay, where we can have a breakouts in that case. So you can simply go and check in the triggers option in concept, which will help you to easily track that where the options options are giving a breakout in that case. Okay, fine. Now we'll try to find some breakouts on a daily time frame, right? So we'll use the daily chart to do this. And what to deploy? We need to sell. Generally, there is a practice that I have seen. Okay, so if we talk about simply the what to sell or what to deploy, okay, so let me just talk about the first one particular stock. Okay, so if I just go and see, even we can check the SBI also. SBI is on the verge of breakout. Okay. Okay, so see, even if I see SBI is likely to break up, above this level. Okay, so there are two things. There are two things. If I go and take this trade, if I buy a future, what happens if the stock started falling? We can have a huge loss, like this, right? So stock can fall drastically. So I'm not going to enter into this contract. So what generally people do, if market gives a breakout, they generally go and sell these options, sell this put option. So 530, 540 का naked put option sell कर देंगे, and that eventually comes out to be good lucrative stage, trade for them. The option sellers I'm talking about. Okay. Now what they are doing, they are actually selling 40 delta approximately. So delta, what is a delta? So it's kind of a strategy that people play. Okay. So in that case, what they do? So every strike price has a different rate of change. Okay. 530 will have a different rate of change when underlying moves. Okay. So underlying अगर 10 रुपए ऊपर जाएगा तो मेरा option कितना change होगा? If underlying moves up by 10 rupees, how much my option will change? Okay. So that is what delta is. Okay. So generally what they do is, if market moving up, they sell 40 delta put option. And when market is giving a breakdown, they are selling a 40 delta put. So that too naked. Okay, so naked means we don't have any hedge against it. If the market totally goes against me, I'll just stuck up in that case. Okay, so how that happens, I'll show you. See, let's say if I go and check, so generally, in a selling, so I've seen a lot of people losing huge amount of money just by getting stuck in kind of this naked selling options. Okay, although this is a good strategy to make money, but eventually you lose a lot of things. Okay, once the trade goes wrong. Okay, so let me just go and check. So we'll go to the architect function. Okay. We'll just go and sell, let's say 50 delta, 30 delta put. Okay. So we can simply go and check the Greek. Okay. So this is 25 delta. Okay. So let me just change it. So how to check the data? You can simply go and check first. Okay. So what is, we want to achieve a 40 delta put option. Okay. So how do we check it? Let's say go to the options, option chain. Okay. So this is free also. This is, you can use it. It's a free application. This is live option chain. Okay. But you'll get the Greeks also. Okay. So 535 is the only option we have a 40 delta. Okay. Fine. So we'll go and sell 535. Okay. Okay. Let me go. Or I'll share one more strategy based on technical analysis. Okay. Just give me 5 more minutes. I'll finish it. Okay. So from selling, let's say if I'm just showing selling 535. Okay. 535 put option. Okay. So we'll go and sell this. Now see this. Now, if what it says now in this case, if the market stays above 535, right, we'll actually make defined loss profit of 23,850. That is what premium we have received. Okay. Now, if the market started falling, we have an undefined loss. See, it keep on increasing, right? This orange line, if you see, and that orange line keeps on falling, and we'll lose money in this case. Okay. Now the question is this: what is the profit that we are making? 2,300, right? Okay. 2,300 profit we are making. 23,000. Sorry. Okay. 23,000 profit we are making. We are selling the 40 delta put option. Okay. That is approximately, it should come half of it. Okay. So, short put. Okay. So we have seen that. Okay. That 30, that was a 40 delta put only. Okay. Now the question arises in this case is that, what if market falls? Or is there any better way that we can approach this thing and we can make money out of it? With or again, in when we are selling the options, we need to deploy again 1.5 lakh. So selling margin is even higher. So that has the same risk that has a futures. Okay, so it is undefined risk, limited profit. Although in futures, at least it has a undefined profit. It keeps on moving, it will make money. Same margin, same risk, and problem that we have is we have a limited profit. So how can we improvise on this thing and to achieve this as a positive is the same, risk reward actually, or probably better thing. Okay. So what we'll do, we will change this strategy in a different way so that we can simply earn. So you don't have to, need anything. It's just a one simple trick and we can simply see that. Okay. Just give me a second. So what we'll do, we're not going to trade this one. Okay. Just give me a second. We'll try to see how can we achieve the same profitability with less risk, less capital, and probably a better strategy than selling a naked options. Okay. So see, we need to achieve a 40 delta result anyhow. Okay. So we'll go in option chain. Okay. So what we'll do, we'll go in this time, we'll simply go and sell 50 delta only. Okay. We'll sell 50 delta put option. Okay. That means we have sold it 50. So we need to achieve 40. So what I'll do, I'll simply go and buy 10 delta in that case. So 10 delta is 485. Okay. So eventually what is this? If we sell this delta option, this one option. Okay. That means that what is delta, I've already explained, is that at what rate it changes. If market moves up by 10 rupees, it will lose 1 rupee, it will lose 0.47. That's why it is negative. Okay. That is the case, and we'll buying 10. So that is 480, 485. Okay. I need to buy that. Okay. So let me create a different strategy now. So what is 50 is we'll sell the current one. That is 545. That is 50. Okay. Okay. We'll need to sell the put option. Okay. Right. 445. That is 50 delta we'll sell this. Okay. Eventually we need to attain the profitability of 40 delta only. So this time we have sold 50, right? Okay. Now we'll add leg, we'll go to the put option, we'll buy 485. That is a 10 delta. Okay, we'll buy this option. Okay. Now see, what is the difference now? See, in this case, what thing we have achieved is that two things. Earlier we have sold a naked option, that we have an undefined loss, higher margin, and limited profit of 23,000. But now by creating this strategy, my profitability increased to 26,000, 3,000 more. Second thing, my loss is locked but although it is a higher rate, but still it is locked. In that case, when we have sold the option, naked option, it can increase to 1 lakh, 2 lakh, 3 lakh, or any point of risk that we can have in that case. Okay. So second thing we achieved is that higher profitability, right? Higher profitability we have earned in this case here, right? And the limited risk, we have again locked the risk anyhow in this case. Okay. And third thing is that we have deployed only very less margin in that. Right? We have achieved a very, by deploying a very small amount. Okay. Because when we sell option, it requires 1.5 lakh rupees approximately for selling. Even the stock is more volatile, it will ask for a higher margin. Okay. Now in this case, what it will ask here, it will reduce to 60,000 rupees probably. Okay. Probably even less than. Okay. So creating this kind of spread. So spreads always have a good situation. Okay. So even if market goes totally against me, I know there is a loss. Okay. But still my loss is limited to at certain point, and I can achieve the better profitability in this case. Okay. By doing this strategy. And this profitability portion is good. Okay. Loss is limited by deploying a less amount. So that is what the options can do in your life. If anyone wants to sell the option, they can do it, right? Okay. They do naked, but they don't understand this simple thing. I have achieved a better results by, of selling 40 delta. I've sold ATM option and I bought 10 options. So that minus 10, minus 50, and that's plus 10. So eventually we are earning 40 delta only, and better than this, even that. Right? So this is how we deploy. Okay. So whenever you have a breakout in any particular chart, okay. So if that is likely to move up, so sell ATM option only, that is 50 delta mostly. Okay. And just go and buy some OTM 10 delta put option in that case. So you'll eventually make money in this case. Okay, probably this delta and all those things are very new to think. No need to worry about it. It's very simple. You can simply go and read it anywhere and you will understand this thing. This is the normal practice that we have. Okay. So we cannot just get stuck in this kind of thing. These are the very basic things we should learn. Okay. And even if you don't know it, it's not required that you need to use this. Okay. But still, if you have this, you can use your mind and you can, deploy different type of strategy. Okay. Not talking from the perspective of only delta only. There are different type of Greeks and we can, choose them to, see this how market behaves, right? Okay. In that case. So this is how the first strategy works. Okay. So this is from the options perspective and we need to is kind of be a good substitute for selling the option by achieving better risk reward. Okay. In this case, and by deploying a less capital also, and I have a better profitability in that case. Okay. Anyhow, my loss is long. You can still play on 50-20 delta. Okay. If you want to do it, right? So that you can simply do, right? Okay. So this is what the first strategy that we have. Okay. Fine. So what we are doing, whenever you get a breakout in any particular chart, sell 50 delta and buy 10 delta. Okay. If that we are giving a negative breakdown, that means on the negative side, so sell 50 delta call option and buy 10 delta call options. Eventually you will have this kind of risk reward in this case. Okay. Fine. This is what we need to achieve in any of these cases. Okay. And that is the first thing, first strategy. I'll take 5 or 10 minutes to explain this X1. So this is how some breakout you got. Let's say you got a breakout here, let's say. So next day creator deploy the strategy and see what happens. This moved up. So by the time the stock will move, even if this much amount, you'll make good amount of money in this case. Okay. Selling 890, 50 delta and buy 10, 520, 10 P delta. Okay. So see this has given me good amount of money in this case. I have deployed this in the last one when this gave a good money. Okay. This gave a breakout. So that is what we have. So we sold this one put option and we bought this one. So what happened? This 22 option become 3 rupees that I made 16,000 rupees and this 3 rupees has become 0. So both have actually become 0 approximately. That is a loss. So we have made this much amount, right? Okay. So this is how you can create it anyhow. So see, and second thing, what happened is that Nifty moved up, it came to support and from here it is reversing. So in this case, we can also create that strategy. So market gave a breakout here. It came back again from here. Once it took a support, then it started moving up. So we can create this strategy. So same happened. So when market was at this price, we sold 16 delta, 1600 PE, and we bought 15,500 PE. And then when market moved up, we have seen market has already moved to 17,000. Okay. So that's almost become 0. So we have made about this much amount in this case. So that is 28 July. So this actually gave me a good amount of money again. See, my loss is locked in 15,000 and on the higher side, we would earn 8,000 rupees approximately. So this kind of strategy might be helpful for you to make good amount of money in this case, right? And achieving the same risk, achieving the same risk reward that the option seller has and deploying a less capital and eventually earning higher returns, right? So think from that perspective, okay? Even if you're an option seller or you want to become option seller, you can try it. Okay. So this is first strategy that you can make. Now, second, we'll talk about the option technical perspective, how to trade the first hour of the market. Okay. First hour is very critical. Okay. Because you have witnessed a huge volatility. So a lot of people are scared of taking the trades in the first hour and they always want the market to get settled. But you see that a lot of trading happening actually in the first hour only. Okay. So how do we do it? Okay. So most traders are basically scared of this huge volatility, right? Okay. But when there's a problem, there is an opportunity arises, right? Okay, that's what we need to follow and we need to find. Okay, so we'll try to use that trade the first hour, using the basic simple technical indicators. Okay, first, so we'll try to find a breakout using Bollinger Band. Okay, so Bollinger Band mein breakout aayega, then we'll take a trade. Second, we'll try to identify direction using the ADX. So we'll combine these two indicators. Okay, what is a Bollinger Band? Simply let me make you explain. It is kind of a volatility indicator which help you to identify where is the highest level and where is the overbought and oversold level. Okay, how is it made up of? So we have a 20 days moving average and then we have 2 standard deviation above upper band and 2 standard deviation lower band. Okay, so why 2 standard deviation? Because we say that whenever we talking about standard deviation, 95% of the price movement are within that limit. तो अगर वो आपका मूविंग एवरेज ऐसा है and if you see this is a Bollinger Band, okay, So 95% of the time, you will see the price will keep on moving in this. And sometimes you will have a breakout on the higher side, on the lower side. Okay, not specifically every time. Okay, so this is the concept of Bollinger Band. Okay, so this might help me to identify the breakouts in this. Okay, so if you plot the Bollinger Band on the technical chart, it looks like this, something like this. Okay, now you see there are only few times when the price is moving above these bars, right? So this is how it looks. Okay, now second thing is, the second indicator that we talk about is the ADX. Okay, so ADX is basically used to identify the strength of a current ongoing trend. Okay, so what is that? If the stock is ADX value is been between 0 to 25, the stock is non-trending. Okay, its accumulation phase or market is not going in. Above 25, it is in trending mode. Trend could be anything. It can be go up or it can go down. So ADX defines that market is in trending mode when ADX is trading above 25. That means it's bullish or bearish. And on the lower, on the second thing, if it is trading below 25, that means it is a range bound session. Okay. So simple, if we talk about ADX, it is the accumulation phase in between and it is a strong trend. Right? This is how we do it. Now, if you plot these two indicators on a technical chart, it look like this. Okay. Now, what is the trade actually? So you need to identify, you need to find those stocks from top gainer and loser, who are the top gainer and loser in the first 5 minutes of the market. Okay, so how do we do it? We'll go to the top gainer and loser. Okay, so we are checking at the closing of the expiry. So what you need to do is simply go and check in the first 5 minutes. Okay, so any stock which gives you approximately 1.5% move or more than that, okay, simply you can go and check that chart. So just wait for 9:20 and see where what stock this particular the page is showing you actually, right? Okay, so let's say NAM India is giving me a trade. So what I'll do, I'll put, so let me remove this. Okay, so let me remove this. So ADX. So first you need to find those, top gainer and loser actually. Okay. See, this is why we all required it. Okay, so why we need to learn the options. You can see that even using the technical indicators, we need to learn options. Okay, specifically, and simply with simple knowledge, you can make money out of it. Okay, just by understanding few things only. So that like I shared one. So one selling strategy which might probably you haven't seen that people are doing that so often, right? Okay, limited risk capital and limited capital and still making money better than the option sellers. Okay, so what you require in that case? So this strategy is again a very good, it's I've used it many times. Okay, from my side I've used it. Okay, so now I'll put Bollinger Band in this case. Okay, now go to the 5-minute chart. Okay, okay, so I'll just type. So the first talk that, okay, so what you need to do is, let's say this is where it started, the day 9. Okay, so somewhere here. Okay, 9:15. Okay, so logically I'll explain you the trades. Okay, how to take a trade, then I will come to the first trade. Okay, so what is the trade? Let's say market on the first candle, it gave a breakout of the Bollinger Band. Okay, here let's say this is the first candle. Okay, it's not logically, but if we see, let's say this is the breakout and this first candle is breaking the Bollinger Band like this, and see what is the ADX value. ADX value is 17 right now, so we are not taking this trade. Okay, on this case it again gave a breakout. We are not taking this trade because ADX is below 25. Okay, it's still below, still moved up. In this case it moves up to 21. Now what happened in this case, the stock has already moved up 28%, more than 25. So in that case the move has already been come, so we are not taking this trade anyhow. Okay, so let me see if some other trade is there. Now see, this is first candle on that particular day, 9:20. Okay, now see, even at that, in that case IDX is not giving me a trade, so I'll not take the trade. Okay, but Bollinger Band is giving me a trade, but ADX is 22, so we'll not take a trade. Okay, we see some other stocks. Okay, so what we need to have is specifically the first bar of the day should be breaking the resistance. Okay, so So what you need to do is you need to start this whole process by from the first 5 minutes only. Okay, let me just show you some examples that I have. Okay, then we'll come and find it. Okay, see, so what happens in this case? See, the Q means on this particular date, 21st July, it gave me a breakout. Okay, it gave me a breakout. See, this is the candle is breaking the you know the upper Bollinger Band. Okay, now if you see what happens to this value is that on this day somewhere here the value is still above 20, so that is higher than that, so that is already trending. Okay, now what happens is that as soon as this breaks a higher value, okay, on the higher side, and the ADX is trading above 25, so that's the breakout level, and that is trending also. So we will buy the options, ATM options, exactly at this point. Okay, somewhere here 1770, and then see the stock moves up like this, and that moves to almost 1200. Okay, now when we need to take the exit, let the price come and close below this moving average. Simple, right? Okay, so the 20, so it crosses here, so probably this is the exit. So this is what we have made in this case, from 67 to 92. We cannot go and simply sell at a higher price because of the, we don't know that it will reverse or it can keep on moving up. So as soon as this will drop below the moving average, will take the exit, right? So you need to simply go and buy ATM options rather than anything you do in this case. Okay, so we'll buy and sell. Second case, see the same example on the lower side. So it gave me a breakdown on this candle, and ADX value is higher than this. So what is the ADX value on this day? It is higher than 40 very easily. Okay, so it gave the breakdown here. See, so we would have taken a trade here, somewhere here, and what happens? The market moves up in this case here. Okay. So it on this candle only, it gave me a breakout above this level, the middle one. Okay, the red line. So it is 1222, 1210 to 197. So 13, 14 points we got in this case. Okay, simply. Okay. So this is what a kind of situation we can have in this case. Okay, sell and buy. Okay. I'll take the few queries. Don't worry. I'll just take the YouTube. If I get some queries, just wait and I'll see to it. Okay. Now see what happens in this case also. On this day, probably we have this breakout. So that is again 25, more than 25. Okay. So what happens on this bar you have got? So this was a breakout first, and market give you another breakout on this candle. So once the high of that particular breakout candle has been taken off, then we'll take a trade. So here it is already over 40. So it gave me a trade somewhere here. We'll enter in this case 1106, sorry, 1806, and see the price continuously trading above till this price throughout the whole day. It didn't came below that. So it closes around 1840, right? Okay, that's a good move. Almost 35 points we got in this, right? So hold it till 315 and take the exit in that case, right? So the only setup that we required, we need a breakout above Bollinger Band in the morning first candle, and EDX should be trading above 25. If that happens, take the buy or take a buy call option on the breach of the high of the first candle, and sell it once the market is closed below the red line. Okay, sell, buy here. Okay. See, this is what here, fine. And generally, see, this is another case where what happens, it gave me a breakout somewhere here, and here we got more than 25 value. Okay, simply. Okay, so that gives a breakout here. We'll buy 1744, and see, it gave me sell somewhere 1800 on the same day only. So when you get, so it's not always you go and take a trade in the first hour. If you don't get a trade and market is breaking above after that, so you can still take a trade. Okay, but mostly you will get good volatility in the first hour only. So if that happens in the first case, just take the exit in the first 20-30 minutes only. Okay, and see, this completely moves above this value. So that's a good move. Okay, fine. So that is what we have in this case. Okay, so simple strategy, and simply you can deploy. So again, I'll tell you, plotted Bollinger Band on the technical chart, plot ADX. Okay, on the first 5 minutes, if the market closing above Bollinger Band and ADX is above 25, then simply go and take a trade and buy the call option, and it will simply move up, and just close the trade once it is below the the Bollinger Band. Okay, let me see some queries if I have. Okay, just give me a second. Okay. Yes, is ADX. So first of all, ADX should be checked on daily. So it is 5-minute chart. Okay, so plot it on a 5-minute only. For spread, which strike do I take to less loss? Don't try to reduce the loss in this case, because when you're selling the options, you're already having an undefined loss. So 50-40 delta will work in that case. Okay. 35 delta, you can do it. You can simply do it. Okay. But maintain, try to maintain that, or risk reward in that case. Try to see different strike price, and you can simply make money out of it. Okay. एक क्वेश्चन है, मार्केट मूव कैसे मींस प्राइस अप एंड डाउन कैसे होती है? प्राइस एंड अप एंड डाउन का लॉजिक कुछ नहीं होता, हाउ द पीपल, इफ द पीपल आर, सो लेट्स से इफ आई एम सेलिंग समथिंग, कोई चीज मैं 100 पर बेच रहा हूँ, यू आर बाइंग इट एट 100 रुपीज, ठीक है? मैंने 101 पे बेचा, आपने फिर खरीद लिया, मैंने 102 पे बेचा, आपने फिर खरीद लिया, मैंने 105 पे बेचा, अगेन आपने खरीद लिया. So what does that mean? If seller is quoting a higher price and buyer are buying at that rate, it is simply okay. So that is simply, you know will help you to know that the price is moving up. अब सेलर जब प्राइस लोअर रेट पे बेच रहा है, बायर खरीदा तो प्राइस नीचे गिरने लग जाएगा. दैट इज द ओनली थिंग. Concept का support use करके, so Concept is has a lot of tools actually which will simply give you to take some trades. Okay, in that case. Okay, so there are a lot of tools that we'll learn, and eventually you can select all those strike prices. Optimizer is there, one tool which help you to take that trade. Okay, so so technical analysis बता तो दिया. Okay, fine. Okay, so technical analysis we discussed. Okay, so one more thing. See guys, this is what I simply out. I teach a lot of things in this case. Okay, just say I take a lot of sessions in option certification. Okay, and I take workshops. So these kind of some simple strategy that I share with people. Okay, so I have a very premier program that I teach a lot of people from, like this. You can see that this is the one of the option certification that we talk about. Okay, so it is almost like 24 session, and we have 3 months to learn all those things in a detailed way. Okay, so I just try to share some strategy simply how I teach to people. Okay, so probably hope you understand this thing, that what I was talking about. And this is just a 1-2 strategies, very simple, I've shared. There are more interesting and advanced strategies that I have, and I share this in with my students. They're still making money. There are a lot of people who have just recovered the fees when they're talking about that. They have they have taken good trades after even 6th or 7th session, and they have recovered a lot of fees. Okay, so there might be a lot of my students who might be looking at this webinar only, and they might know what I'm talking about. Okay, so this is how we simply do, and very simple strategies. You can learn simply options in a detailed way, and probably some technical analysis strategies that I have created over the period of time, and that you will learn in the over the period of 3 months. And okay, so if anyone is like want to learn from the basics to advance, okay, so this course is very good for you. And I've seen that even if you're trading in the market from last 2 or 3 years, you're still new in the market. Okay, even let's say you've started trading options post COVID, then consider yourself a new. Okay, because you haven't seen the whole market dynamics in that case. Okay, so I would still suggest that you go and you should learn in that case, because anyhow money making is not a so probably if the people who have made money in 2020 after the COVID fall, now in the last whole 1 year we haven't made any money, because market was totally half of this whole year was like was not good for the option buyers, even for option sellers. They don't know what happens, what to do, right, in that case. So that situation, to counter these kind of situation, you need to learn these kind of things. Okay, so that is how this whole situation is works. Okay, so whenever we talk about the option certification course, we generally talk from the perspective of the whole holistical course. Okay, specifically we talk. Okay, so let me tell you what basically we cover specifically in that case. Okay, so I have talked about, so we generally talk about the basic of the stock market also. So we start with very basic things, then we talk about derivative options, and option premium and all those things. So first 5 session is very basic, and from once we start with using the open interest and all those tools, From here we will start trading the market. Then we have some live session in this, then we have some guest sessions, then we talk about all the option Greeks in detail. Okay, gamma and all those things, volatility in detail. Okay, see there are a lot of topics in volatility, so we'll discuss all those things. Then we have quite a good live session in this case, and then we have different type of strategies that we're talking about. Okay, and there are a lot of things that I don't mention here, but I still take that. So we'll talk about most of the things in technical analysis perspective also. So there are a lot of trading setups also, and then we have one good session with Shubham Agarwal sir also in this case. So that's a kind of a get session. So you can simply, if you looks like going for it, you can simply register. And for the people who are attending this webinar, I can simply give you, so that is the cost with the Pro Plus application. Okay, now so I have one, just give me a second. Okay, so if you just go and check it, so this is the cost. Okay, so if you just type OC10 code for this, so we'll have a straight discount of 5,000 rupees in this case. So that will cost you 6499. Okay, that with the Pro Plus application. So I'll talk about the Pro Plus application in detail also in that case. Okay, so by the time you will finish the certification course, you will understand the whole application also in detail. Okay, and then if you want to just go with the Pro Plus application, so only for Pro application, you can simply go and check it again and put that code. Okay, OC10. Okay, so you will get this. Okay, approximately this discount. So 5,000 is a flat discount that you're going to have on any cost. Okay, so that will cost you this much. Okay, so very good and extensive course. Okay, probably I've finished 6th batch of this option, so probably we'll starting with the 7th one. Okay, so it's almost a year, and we have grown up a good decent number of people. I have trained a lot of people in the last 1 year, and they're still making good amount of money in the option certification. And at the end, the agenda is always that you should learn from that perspective. Okay, and the sessions will be mostly in the evening, right? Okay, so you will always have ample time, and you will get at least 3 or 4 months recording of all these sessions. So extensive 24-month session. Okay, so 24 sessions for over the spread of 3 months specifically. Okay, and I keep on sharing different new and different strategies in that case. Okay, so we have, just like I've shared 2 strategies that I discussed. These are very simple one. Okay, and there are probably more advanced also in that case. So you will eventually learn all those things. Okay, so if you are, so we have starting the next batch in the end of this month. So if you're interested in, you should definitely go for this, and be that 10%, we come in and come into that 10% of the people who are making money. So eventually, uh, what I have seen that there are a lot of people who are trading the market. They just go and see what other people are doing. They just keep on copying that. Okay, I won't let you to just do what I taught you. Okay, the only agenda is that make your mind research ready in this whole market. Okay, so when I teach you, I'll teach you, okay, how can we see the different aspect of the market in a different way. And then once you understand this thing, you always think of a different perspective of the market. You cannot count on ongoing basis. You can simply deploy one strategy and keep on making money for next 10-15 years. You need to evolve yourself. You need to evolve yourself in the over the period of technical analysis, or over the things of technical analysis, and then on the options the topics, right, specifically. So there are a lot of things to read, things to understand. So simply by doing this, you can you should learn over the period of time. Okay, and there are good strategies that at least they will take time to become obsolete, like for 4 or 5 years. Okay, then probably we'll think something of new, right? So that is the thing. Okay, so if you are totally interested, you should definitely look for this program. Okay, and this whole course is actually made by me, and I have put my all 10 years experience, and all our management, like Shubham sir, Bhavin sir, and Tina ma'am. So we have all come together, and we have created this extensive program that nobody offers in this whole industry actually, right? Okay, so eventually you will become derivative experts by after completing this. So I didn't feel that we have left out any particular specific topic that we won't know after this. Okay, so that is what we have. Okay, fine. So and that code you can apply. Okay, so that will be available for only for today's till 12. Okay, so try to avail that if you are interested in learning, the the certification course. Okay. And any doubt, any further doubt, if you have, you can write it in the chat box. I'll reply. So I think I replied some of the queries. Okay, I think I have talked about all the queries, right? Okay. Okay, let me see. Just give me a second. What about SL? So SL, okay. So in that case, so SL will always be the low of that particular bar. Okay. So जो भी लेट से आपने ट्रेड लिया है तो इसका ब्रेकआउट कर रहा है तो दिस इज द स्टॉप लॉस ऑफ दैट पर्टिकुलर बार. ओके फाइन. Just give me a second. Fine. So, okay, I'll show you the PPT again. Just give me a second. So जैसे मान लीजिए अगर आपने इसमें ट्रेड लिया है फॉर एग्जांपल. ओके, सो जैसे मान लीजिए इसी में ट्रेड लिया है. सो if that gives a breakout, so this is your stop loss. The low of that particular bar, which is giving me a breakout. Okay. Who is my mentor? Okay, so my mentor was he's 75 years old right now. So he has a good experience of 50 years in the market. So he started his trading when he was 21, right? So will not tell his name, but I have learned from someone who has a 50 years of experience, right? Okay, so don't worry. So he might be even older than Harshad Mehta, right? In that case, right? Don't worry. So okay, so trap and what is ADX? So ADX is an indicator, right? So which defines the direction of a market. Okay. Zero to champion knowledge will get from the course. Zero to not champion, but I would make sure that you will stop losing your money anyhow. Okay. And then again, as I told you, once you stop losing your money, you will eventually make money in that case. Okay. That is what I have. Not a separate Hindi course we have, but generally we do it in both the languages in the same way. But mostly we will do in the English. Okay. Not a specific Hindi course that we have. Okay. But if all the other students are, Hindi, I can continue that Hindi. But if that one person is from the English, we have to cover that whole part in English. Okay. That is the issue. Okay. Fine. A trap indicator, I have a lot of already videos I have created. We can simply go and check it, right? Okay. Just wait. Okay. So I think I have answered all the queries. Okay. So, okay, guys, thank you so much. Okay. So I hope you like this session. Okay. So I tried to cover some basic parts and then some strategies that we discuss. Okay. That is very simple. You can try it from your perspective also. And that we have a code for the option certification course that if you're interested, you can join that. Okay. And inherently, okay, so I have, as I told you, this whole I have put my 10 years in this. Okay. And this course is very exhaustive. You will eventually learn a lot of things and a lot of new things that you even don't know about the market. Okay. And that will eventually give you an edge over the other people, and you will still, you can make money out of the market. Okay. The agenda is always to make money, right? Okay. So that is what I'll make sure that you do. Okay. Or at least you will understand that thing. Okay. Fine. Okay. So that's all. Or even after that, if you have any query, you can simply, contact to the support team of our, okay, at this mail or this number. Okay. They will eventually help you to, of any of your query, right? Okay. So हिंदी में कम बोलता हूँ. Okay. So not an issue. Okay. So thank you so much, guys. I'll see you again tomorrow in the morning brief then. Okay. Thank you so much. Bye and take care. And okay, fine. So, okay, guys. Okay. Thank you so much for attending this session. I hope you liked it. थोड़ा आपको नॉलेज मिला होगा मार्केट के बारे में, ऑप्शंस के बारे में. इवेंचुअली माय पर्पस वाज टू give you some knowledge about the people who are very new to this market. Okay. and hope you liked it. Probably I'll conduct some of the more sessions like this only so that you understand the market, and you still always have some strategy in your mind to at least to think about the market in a different way, right? Okay, so if you like it, just do share it with other people also, and you still have a time to join the course. If you have interested, you can join it. Okay, thank you so much. Bye and take care. Right. Okay.